Pankaj, good morning. Thank you for joining us. Nothing extraordinary from TCS, nothing great has come from Wipro or Tech Mahindra, but markets are mighty excited that for IT the worst is behind. Is this indeed true?
Morning, Nikunj. Yeah, I would like to think so, Nikunj, that the worst seems to be behind for IT services company, primarily for two or three reasons. One, from the time they peaked in late 21 and early 2022, over the last 18 months, valuation in the whole sector has moderated very significantly. If you see large caps, the valuation have corrected about 20-25%, and the valuation correction in mid caps has been even more steeper, something like 30-35%. More importantly, in 2022, early 2022, when everyone was trying to building, an environment around steep Fed rate hikes, the apprehension was that the U.S. economy will slip into a very sharp contraction given the magnitude of sharp rate hike that the U.S. Fed was talking about. But the fact is now, fast forward 18 months, we've had very steep rate hikes from Fed, one of the sharpest rate hikes that we've seen in the history, and yet U.S. economy has turned out to be far more resilient. As a result of which, what we're seeing is clients in US, or if we talk about the top 1,000 companies, which essentially is where the client base for Indian IT services company is they had pushed back or they were deferring projects 18 months back on the fear of a sharp contraction in the US economy. And now that the economy is holding back, there is a renewed confidence amongst clients where corporates are willing to commit money to projects and larger projects. So I think we are seeing some sort of a revival in that sense in order bookings for IT companies. So when you talk about results for TCS, I think what we clearly saw that while the results were somewhat muted or moderate in terms of revenue growth, but the TCV, the total contract value, was very strong at $10 billion plus. And we've seen similar trends with other IT companies also. So I think the last 12 months that we've seen some strong order bookings from these IT companies, this should start translating into better and stronger revenue growth for Indian IT services companies from the second half of this year. So my take is that the worst is behind for IT services sector and stocks, and probably it's a good time to invest into these stocks from a medium-term perspective.
Pankaj, I'll tell you what, the story of the day today is actually Route Mobile. Now, we were just talking about Route Mobile. I mean, it's fantastic news for minority shareholders because this company went public in 2020, issue price 350. There is a M&A deal at 1620. So, Soumit is going to take the clock back. But before he does that, Soumit, what is there in the fine print which has triggered this mighty sell-off in the stock?
Well, firstly, if you see, the deal here is that the Proximus Group will be acquiring the promoter stake in Route Mobile at a price of around 1,626 rupees per share, which was lower than the current market price, and hence we are seeing some kind of a sell-off in the share prices currently. But this 1,626 price that the company has come up with is the 10-day volume weighted average price that they have considered. Now, this Proximus Group will be acquiring the 57.56% stake of the promoter, and the promoter group will be investing a part of the proceeds of this amount in the promoter company itself, that is the Proximus company. So they are not entirely exiting from Route Mobile, they are just upping their stake in the new company, that is Proximus, which is also into the same business, that is CPaaS. Now, to just give a perspective, the promoters will be getting close to 643 million euro by selling their stake in Route Mobile, and they will be investing close to 300 million of euro in Proximus company, which will then become the new promoter of Route Mobile. Now, what Rajdeep Gupta has said in a statement to Proximus release, they are saying that the partnership with this Proximus will pave the way for Route Mobile to become one of the global players in CPaaS and will help them achieve the $1 billion revenue run rate match much sooner than anticipated. Now, they earlier expected this revenue run rate in the next 3 to 4 years, but given this new deal that they have done with Proximus, this revenue run rate will be achieved much ahead of time according to Rajdeep Gupta. So the deal here is that Proximus will be taking promoter stake in Route Mobile, and Route Mobile will be investing half of the proceeds from this deal in Proximus, and they'll get close to 15% stake in the new promoter company, that is Proximus of Route Mobile.
So, Sumit, why is this negative for minority shareholders of Route Mobile?
This point, if you see, it doesn't look to be negative for the minority shareholders because there will be an open offer, and Proximus has clearly said that given the fact that their holding will be increasing, they will do a open offer at the same price, that is 1,626. But given that the price was a bit on the lower side compared to the current market price, we are seeing some kind of a negative a downtick in the share prices. Also, given the fact that the promoters are exiting from the company at this moment and they're not fully investing the amount that they are realizing from the stake sale, could also be taken a bit negatively from the minority shareholders at the current point. That is what we are understanding so far.
Actually, Sumit reminds me of what the Tharocare and the Farmeasy deal was. When Mr. Venu Mani sold out, he got some cash and he took some stake in Farmeasy. So I think this deal pretty much in terms of the architecture, in terms of construct, seems to be on the same line. The stock meanwhile has fallen. The fine print, like they say, devil is always there in the detail. The fine print is strikingly different. But if you're a minority shareholders, think about it. I mean, the open offer will get triggered. This company will become part of a larger group per se. And in that group, promoters are not exiting the company lock, stock and barrel. They would be investing part of the proceeds in Proximus, and they would continue to scale up Route Mobile to a different level. I mean, what happens to stock in the short term could be a function of day trading, technicals. There are a lot of other factors. So Pankaj, we started with IT software or the traditional IT services. But interestingly, there are a lot of niche companies which in last 2 years have got created in the IT space. You've got Route Mobile, Map My India. There are a lot of companies which essentially are IT software, CPAP or SaaS, which have taken birth in post 2020.
Yeah, that's true, Nikunj. And some of these, meaning if you look at the last 5-10 years from the time these companies have been around, they've really done well. But I think what distinguishes IT services, the fact is Indian IT services has done exceedingly well over the last 30 years of evolution of the industry, right? I was just looking at data last week that last financial crisis, when we had the last big IT wave, 2008, India's IT exports were $40 billion, and currently we are at about $180 billion. The fact is that the global IT spends are $2 trillion, and India is still a small fraction of the global IT spend, which effectively means IT services companies can keep growing at healthy rates for a very long period of time, despite having grown so phenomenally well over the last 30 years. Some of these new companies that are emerging in different segments, I think the real question mark here is about ability of these businesses. So far, they've done pretty well, but the question is, can these companies be growth companies over the next 5, 10, 15 years? And, is the size of opportunity big enough for these companies? For example, I've seen globally, a lot of parts of CPaaS business have got commoditized. Pure messaging or CPaaS is just commoditized. The value addition lies in the analytics you run on top of CPaaS and stuff like that. So businesses are evolving. The ability of these companies to deliver sustained growth over a longer period of time, and yet, more importantly, profitable growth, which is value accretive to shareholders. I think that's where the question is in terms of these new emerging business models.
Right, Pankaj, one of those days where we have complete paucity of time. So, we'll have to you'll have to allow us to change the gears, but really appreciate your time. I know it was a late minute request. You accommodated the interview request. Really appreciate that.
Sure. Thank you, Nick. Thanks a lot. Always a pleasure.